Welcome to TradeTheNBA.com. This is John Sports for the 11th of January, and we continue to see that push to the upside. Obviously, it was coming off of mostly improved DSC red, which would be long-term buyers, and corresponds relative to new fund money coming in around the 5th, 6th range, and boom, breaks to the upside, a little bit close to a positive extreme. We kind of saw a few of these. They tend to get retraced within this range. What we're looking at, though, is a much, what I would call sloppier shakeout, where now you're getting higher highs on lower shakeout readings. You're starting to see some activity in the power mode too. I'm expecting that we might see a little bit more extra volatility as we approach the inauguration and finalizing the end of the Trump era, blah, 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 blah. All code words for just the market is going to make a little bit more dramatic moves, particularly given the uncertainty of how the direction of things will go, and as we get rotations going through from an NQ standpoint, much cleaner. In fact, that DOC, it really is much better than the S&Ps, and that's probably where you're going to see the lead. However, you have had a significant move that really hasn't corrected at all, and we may start to see that. Of course, the Euro trade here that's been bumping on the idea that more U.S. stimulus would outperform U.S. pulling back just a little bit within that. Really don't have any positive extremes other than going back right over here, which had already filled a little spike low. We're probably just getting a little bit of feel back to that. Plus, the reality is at some point the euro is going to need to come back to a more sane position, which would be below the 116 level. So it's just a question of U.S. euphoria vis-a-vis, is inflation possible? According to gold here, filling back those positive extremes it had, caving all the way back, and that's problematic for gold is really to the cryptocurrency pressures, and secondarily, whether or not there will actually be an inflation. Yes, you've got the devaluation issue. That's going to continue to keep things elevated. But a real strong turnaround, either from growth or at least the pandemic ending, would make a huge difference. Until that happens, I think these are the kinds of broad pushes, pullbacks, and then continue the overall pressure, though, still to the upside for it. Intraday, it got a little rockier than normal. What we have been producing a lot of is this pre-market positive extreme setup, a little bit of gyration where you then fill it. And so all we do is just mark those setups, and then it's just a matter of looking for breakdown setups. Quite a few of them as it get a little mucky in here. Where you have the steel cross. So some of these you face a little bit more heat than others. What I tend to look for is usually a lower peak of DOC red at the same time where you're getting that crossover of the green as well as the steel crossing the cyan and your spike of orange and that. And those tend to be the strongest carriers. And then of course, the dip below zero, orange dips below, that's usually the buy configuration, that, particularly when you're looking at non-reset steel. In this case, the reset was back over here. Just seeing that dip gives you that added confidence in that setup. But look at, as soon as it did, you had green over, and then you had a couple of spiders take place. But then it's just a matter of looking for that steel below with the orange spike and the green crossing. And it still went up another bar or two later, but filled it all back in, did the exact same thing. Back over here, the dip below zero. This one was much more responsive and closer. Would have expected a little more from this one on the rising P2 level and that. But nonetheless, produced the exact same setup. And that one actually produced an extended low, which was interesting because in that secondary low, you had higher shakeout improvement on lower lows. So divergence there from the shakeout. Orange dip, you didn't have the dip under zero within a reasonable time. It happened all the way back over here. What you did was having a breakout of DSC red into a new zone from above the previous peak. and the green moving above cyan. It did briefly shift, but you shifted at the same point where everything is still rising as well as shakeout, and that was enough to continue to propel things. And that created a whole series of new positive extremes. And that began right there around 37.98, and then you added a few extras to it. So what do they do in the pre-market? Yeah, fill them all right back in. And that's how they play it. Just in case anyone who was in this run thinks that they're going to make it to the weekend by just hitting a stop, below a certain point of certain Fibonacci. No, they're going to run through those to take out what they would call weak hands. Either believe in your position there, or they're going to take you out. So whenever I see those positive extremes, it is a warning. You're not going to be able to just blanket leave soft stops in place. So it's just an FYI. As always, though, trade well. We will certainly put up anything on the Skype chat. Talk to you later.